Hello, good morning. And we're back again in the markets this morning. So let's just get started and see what the market has in store for us. So as usual, we start off by looking at the economic calendar. And the main markets we're looking at again are the Euro US dollar and the dollar Canadian dollar. So we're going to see if there are any reports of high importance that are due out that could affect either of these markets. So today's Tuesday, the 25th of May. Again, I'm using my own time zone of GMT+2. So always make sure your economic calendar is set to your own time zone. So the times I'll be quoting are GMT+2 times. So today's Tuesday, the 25th of May. So let's see what's coming out. So you can see at 8 a.m. in about an hour's time, at 8 a.m. GMT+2, we have the Germany GDP growth rate report. So that's a report of extremely high importance. There are four reports that are always of very high importance. That's the GDP, gross domestic product, CPI, consumer price index or inflation rate, interest rate, and unemployment rate. Those four reports are major: GDP, CPI, interest rates, and unemployment rate. So when you see any of those reports coming out for any of the countries that you're trading, their currencies, you need to note them. So that's a big one for Germany. And of course, Germany being the main powerhouse in Europe, that would obviously affect the euro and hence the euro US dollar or any currencies paired with the euro. So that's due out in an hour's time at 8. Then at 10, it's again from Germany, we have the IFO Business Climate Report at 10 a.m. GMT+2. And at 4 o'clock, we have out of the United States, the CB Consumer Confidence Report. And that's the last report of the day. So the last report for today is at 4 p.m. The report out of the United States, the CB Consumer Confidence Report. And of course, reports out of the United States affects all markets. All markets are affected by reports out of the United States. But again, today is actually a good reminder or a teaching point. That is you now having to decide which report is of the most significant relative to the market you're trading. So for today, the last report of high importance is at 4 p.m., the US CB Consumer Confidence Report. But in view of the fact that the Germany GDP growth rate report is of a higher significance than the rest of the reports today. So this report in less than an hour's time, the Germany GDP growth rate report is of huge significance and certainly much more significant than the report due out at 10, the IFO Business Climate Report and the US CB Consumer Confidence Report. So in view of the fact that this report is of higher significance than the rest, although it's coming out before those reports, I will place my first trade around 8. So as usual, just before 8 o'clock, I'll assess the euro US dollar because this is relative to the euro. So I'll assess the euro US dollar just before 8 a.m. and then place my pending orders then. And if the market takes my order, I will have only one live attempt prior to the last report of high importance at 4 p.m., which is the United States CB Consumer Confidence Report. So again, every day you just have to take each day on its own merit. So ideally you want to avoid trading prior to the last report of high importance. That's the ideal thing to do in general, but you take each day on its own merit. So today, the report out of the US at 4 p.m. GMT+2 is the last report of high importance. And normally you want to wait till then before you trade. But today, because you have a report that is even more important than the last report, which is the Germany GDP growth rate report at 8, GMT +2. But today I'm going to have placed my orders just before that report at 8 a.m. And I'll have one live attempt. And if I lose out on that trade before the last report at 4, I'll stop trading and have my second attempt at 4 p.m. So it's like, so you have to take each day on its own merit. So looking again for the rest of the week, which we always do, to see if there's anything major coming out. And the major things you're really looking out for the rest of the week tends to be interest rates, mainly interest rates. That's what you're looking out for, interest rate decisions, and specifically US unemployment report. Well, as we know, the US unemployment report comes out on the first Friday of every month. But it's always good to check as a routine the rest of the week. So that's what you're looking for, US unemployment rate and interest rates. And of course, what you're looking at for interest rate report relevant to the market you're trading, and most importantly, the US interest rate, European Central Bank interest rate, and the Bank of England interest rate. But of course, if you're trading currencies paired with the Canadian dollar, then you look out for the Canadian National Bank interest rate decision. So you can see tomorrow we have the New Zealand interest rate decision, but of course that's if you're trading currencies paired with the New Zealand dollar. So that won't affect us. That's Mexico. So that's Wednesday. And Thursday, we have the consumer confidence report, US GDP growth rate report on Thursday. And then Friday, nothing really happened on Friday. You have the US PC price index report. So basically, nothing major coming out for the rest of the week in terms of interest rate decisions, the market we're trading, or the US unemployment rate. So we can just go ahead and trade as normal today. And you can see there on the 31st of May, which is next week, Monday, there's a public holiday in the UK and the USA. So the UK and USA is closed for business next week, Monday. So we're going to avoid trading next week, Monday. But that's next week, Monday, 31st of May. It's a spring bank holiday in the UK and a Memorial Day in the USA. I think I spoke about this in previous sessions that sometimes this is where you can, the economic calendar can be helpful like this, because you can see, even if you sometimes forget, you shouldn't forget to check the holiday calendar and know when the public holidays are coming up. Don't 100% rely on your economic calendar. But yes, you can see the economic calendar too also can be helpful in reminding you if there's a public holiday due out. It's always at the top. Okay. So let's get back to today. So today, we already said for the Euro US dollar, we're going to place a first trade around 8. And if we lose out on that, I'll wait till 4 before I place my second trade or second attempt. So that's for the Euro US dollar. Of course, for the dollar Canadian dollar, this has nothing to do with the dollar Canadian dollar. This has nothing to do with the dollar Canadian dollar. So for the dollar Canadian dollar, I'm going to avoid trading the dollar Canadian dollar till 4 p.m. when the USCB consumer confidence report comes out, because this is the only report and the last report of high importance that would affect the USD Canadian dollar. So we can now see you have to take each currency pair again on its own merit. Of course, you look at Market Watch, see if there's anything untoward going on in the global markets. Again, like I said, that's why I love trading currencies. It tends to be the major things that affect the global markets. I think the last time we spoke, I was talking about the tension between Israel and Palestine, and the international bodies asking them to cease fire and worrying that things will get out of control. But thankfully, they've ceased fire now and things have calmed down for now. So that's the only thing that was potentially brewing that could create uncertainty in the market. But other than that, there's nothing else causing uncertainty in the markets in relation to currency trading. So let's come to the charts. We'll start with the Euro US dollar. We'll start with swing trading. So I'll go to the daily time frame, D1. So looking at the daily time frame, again, I'm in a live swing trade. The swing trade started on the 13th of April when the market broke the moving average and took my pending buy order with a 100 pip stop loss. And usually I don't start moving my stop loss until the market has moved at least 100 pips in my direction, which happened on the 19th of April. The market moved 100 pips in my direction, and I've just been moving my stop loss with the moving average every day. So today, putting my cursor on today's candlestick, today the 25th of May, the moving average 50 today is 1.20218. So I'll round that up to 1.20222. So 1.2022. So I'll just adjust my my stop loss to 2 pips below that. So 2 pips below that will be 1.2020. So I'll just adjust that to 1.2020. So as you can see again, my entry point was 1.1941 and my stop loss is now at 1.2020. So basically I have now locked in, let's calculate how many pips, bring out the calculator. So that's 2020, which is my stop loss now, minus my entry point, 1941. So I now have a profit of 79 pips. So that's actually how much I have here. So all this is not my profit yet, although the market is all the way up here. But if the market all of a sudden reverses and falls and then breaks the moving average and takes me out, I will only make 79 pips. That's what I'm guaranteed to make on this trade so far, 79 pips. So that's for the swing trade. Got to go to the 5-minute time frame now for day trading. So we can see the market is currently trending sideways. You can see where it fell sharply and then went up, and then I'll take all this as a sideways trend for now. So that's the high of the sideways trend, 2231. And low there is 2203. There we are. So that's the current sideways trend of the market. We can see clearly now the pivot point is within the sideways trend, but S1 and R1 are outside the sideways trend. Well, like I said, I'm going to leave it alone till 8 o'clock GMT +2, and I'll reassess and decide where to place my pending orders. Unfortunately, I'm going to be out in town and not available at 8 o'clock to post my trade on the platform. I'm actually leaving home immediately after this session, and I'll be placing my trade on my on my mobile phone. So potentially, if the market is still trending sideways just before 8, I'll place my pending order just above R1 and the pending sell order just below S1. But of course, make sure you reassess the charts. The whole picture might look completely different just before 8, and then decide then where to place your trades. So that's the Euro US dollar. Let's come to the dollar Canadian dollar. Let's start with the daily time frame D1 swing trade. So you can see the market is extremely bearish, just been trending down for a long time since about April of last year. Just been trending down, extremely bearish. So let's see, today the moving average 100 is 1.24937. So I'll round that up to 2494. And then I'll just adjust my pending buy order to 2 pips above that to 2496. So just at 2496. 2496, and 100 pip stop loss, that'll be 2396. So that's it for the swing trade. And then go to the 5-minute time frame for the day trading. Now, this is the reason why I say I like to draw white lines, because sometimes it helps you just quickly determine a trend of the market. Because that was my sideways trend from yesterday when the market was trending sideways. And you can see where it's broken the sideways trend. So now, because of this white line, I can now see this is where the new sideways trend is. So it just makes it easy and quick for me to assess where one trend stopped and when another one started. Because I know that's where it was initially trending sideways. You can see where it's clearly broken that sideways trend. So I now know this is now the new sideways trend. So that's another reason why I like to draw my lines. So I'll just adjust it now to this new current sideways trend, which the high point is there. So that's 1.20555. I'll round up to 2056. So I just want to edit it, the high to 2056. And edit the low to that. Low there's 2038. There we are. So that's the current sideways trend for dollar Canadian dollar. And you can see the pivot point is just outside the sideways trend, and S1 is just outside the sideways trend. But again, like I said, because of the report of high importance due out from the US, I'm just going to avoid trading this market till 4 p.m. GMT +2 when that report comes out. Okay, so that's my plan for today. Any questions? If you have any questions, you can either raise your hand or send your question through the chat box. Any questions before I go to the farm? Yes, good morning, Bola. Hi.
Yeah, good morning. Sorry, hi. I couldn't see the option to raise my hands on my screen.
That's okay.
Yeah. The question that I want to ask is that the last time you and I traded together, you had reached the trade had moved to the halfway level, and so you did some calculations with the you did some minuses on the pips and what have you, but you did it so quickly, and then afterwards we finished. I couldn't figure out how you did it because I'm still struggling a bit. So when I believe I'm at the halfway mode, all I do is I just move my stop loss. I don't kind of say, okay, opening is minus this and closing.
Oh, no, like I said, what was that? Okay, you just keep, like I always say, it's best to keep this thing simple. So if you look at you can see my platform.
Yeah.
So you can see here, for example, I bought this euro US dollar. You can see the price I bought it at 1941.
Yep.
So anytime you place a trade, you will see clearly on the platform what your entry level was.
Mm-hmm.
So let's take this as an example now. So let's assume I entered this trade at 1941. So let me bring up a notepad. So it's as simple as that. So my entry level was forgotten what it was. 1941. Yes, 1941. So since that's my entry level, my stop loss will be 1.1921. And then the 30 pips point to move my stop loss will be my entry level plus 30 pips. So that'll be 1.19 plus 30 pips. 4 plus 3 is what?
7. So 1971. Okay.
Yeah. So when I enter this trade at 1941,
okay,
I'm going to leave my stop loss. I'm happy to lose 20 pips. But once the market gets halfway, 30 pips, that means 1971. That's my entry level plus 30 pips. That's when I'll move my stop loss.
Okay, that makes sense.
Yeah, exactly. Okay. So once I see that the market is at 1971 or higher, then I just go to my live trade, right click, modify order, and whatever my stop loss is there, I will just change the stop loss to the entry level. So I'll just change my stop loss to 1941.
Okay, I didn't do it that way. How I've been doing it is just that I'll click onto the actual trade itself and see how, for instance, it could be the actual trade itself. It could be telling me that I'm now, I don't know, 12 pounds up, and I'll just click it and I'll move it to like 13 pounds or 14 pounds. I never kind of used that method that you were using. So when you did the other day, I was like, actually, hold on a minute. Am I doing it the right way? Also, but it was so quick that I couldn't pick it up. Okay, so that makes sense.
Yeah.
So what you do, so it's your entry level plus 30 pips.
Exactly.
Okay.
Yeah. And I think that's why I wanted to demonstrate it like this, because I always say with people that we're trading, especially when it comes to those pips and calculating your stop losses, your profit limit, the 30 pips, it's always best to just keep it this simple. And like I said, like I think we discussed it before, how much you're making is not exactly equivalent to the pips, unless you're doing one pound per pip. So if you're doing 1 pound per pip, then yes, 30 pips will be 30 pounds. But of course, if you're doing 50p or 10p or 20p per pips, for example, if you're doing 20p per pip, by the time you get to 30 pips, it will be 6 pounds. So one has to be careful that just to make it simple, it's just better to calculate. It's the pips you're calculating, not the amount of money you're making or losing. It's the actual pips. Yeah.
That makes sense. Okay, thank you.
Pleasure. Any other questions? Okay.
Yeah, and I think I'm beginning to change my mind seriously about, because the lines thing, because I always used to think it's a bit of wahala, but now looking at it more closely, I'm thinking I think it's best practice and it's something I should get used to again. And yeah.
Yes, because like you say, it's just like when you went back to saying, I do things quickly. Technically, they're not quickly. It's just that I've devised means to trade that makes life easy for me. And that's the whole aim, is you do things that will make life easy for you. And, again, and that is why it's always important to know how to use the platform to your benefit. So if you're going to adopt something that's going to make life easy for you, that's what you don't want to spend too much time doing stressful things and long, complicated things, just like we discussed with the pips. Once you just know you're just adding plus 32, your entry points or pips, end of story. And like I showed you with the white lines. So like I said before, I'm going out immediately we finish this session, I'm going to hit the town. When I get back, if I just look at my chart and I see the euro US dollar is still trending between these white lines, I know immediately it's still trending sideways. I don't have to think twice. So that way you quickly analyze the chart. So same with this euro USD, like I showed earlier. I look at the chart, I see the previous sideways trend that has been broken. I know where to start straight away. So all these sort of little things just help you make quick decisions. So it's just trying to devise ways to make life easy for you, really.
Okay, thank you.
Pleasure. Okay, any more questions? Okay, awesome. Headed to the farm. All right, have a good morning, everyone. Enjoy your day.